How many of us here use GCash for online payment? How about those who have Globe Wi-Fi at home? What if I tell you that you can invest in what you love while earning passive income? Greetings, everyone. We're here today to help you make your next investment with us. All is possible with Globe.
So, Globe Telecom Inc. is one of the three major telecommunications and digital service companies in the Philippines, a conglomerate of many communication and fintech subsidiaries. The company primarily focuses on telecommunications, offering mobile and home broadband or internet services, fixed line communication, and corporate data. The company is known for its service that it provides to its customers through three major brands: Globe Postpaid, Globe Prepaid, and TM, as well as its financing service through GCash. Next. For its economical analysis, Globe's growth is closely tied with the Philippines economy, with the GDP averaging around 6% growth post-pandemic. Consumers' purchasing power increased, driving the demand for telecom and digital services. The company's revenue ranging from 3.4 to 3.37 billion dollars when 2021 started up until 2025, mirroring the nation's economic momentum. However, issues like the 2025 corruption scandal, which led to 185 billion pesos loss in market capitalization, also affected investors' confidence and stock valuation, including Globe's. Next. On the contrary, higher inflation rates affect the capacity of ordinary people to purchase goods and services as demand goes higher. Inflation increases as the supply of goods and services could not keep up. A reflection of this statement is evident in the performance of the company from 2021 to 2023. For starters, in 2021, the inflation rate for the year averaged 3.7%, which allowed Globe to garner $3.37 billion. On the next year, in 2023, there is a substantial increase in the inflation rate, which led to the decrease of the revenue, which is $3.17 billion at year end. So, fluctuating interest rates greatly affect Globe performance and financial strategy. Since the company relies on large infrastructure investments to expand services, it often raises capital through loans and leases. Higher interest rates increases borrowing costs, reducing profits and valuations, while lower rates ease debt and expenses, boost investment, and improve cash flow. As exchange rate rises, corporate and investment activities dampen foreign exchange as well, as a stronger currency can increase returns, while a weaker currency can reduce activity. This would mean that operations would tend to become more expensive, which drives cost and narrowing Globe's profit. For the effects on stocks and financing, bonds and stock financing greatly influence Telecom Inc.'s financial stability and growth, as rising bond rates increase borrowing costs, while lower rates enable cheaper financing and greater investment opportunities. When bond increase interest rates rise, borrowing capitalization conversely rises. Therefore, their margin will be more vested into the improvement of their services. Same goes to stocks, where the lower the interest rates and how it affects, more investors would be more pleased to invest into Globe and provide them with confidence that would then improve their services.
Okay, for market and industry analysis, both stock and bond markets were hit differently by the 2020 pandemic. Stocks crashed, then rebounded, while bonds expanded amid increased government borrowing. Rising interest rates in 2022 to 2023 hurt both markets, but conditions improved in 2024 as inflation eased and the BSP cut rates, leading to stock gains and stronger corporate bond issuance. From 2020 to 2024, the Philippine telecom industry underwent major transformation as regulatory reforms ended the long-standing duopoly and spurred new competition. Next slide, please. The pandemic boosted demand for digital service, driving heavy investment in 5G and fiber networks. However, challenges like the digital divide and rising competition continue to shape the industry's outlook. Globe Telecom shows financial growth and resilience, balancing cost management and digital expansion amid strong competition, high capital costs, and regulatory changes in the past 5 years. Here is a graph of the three major players in the industry. Globe and PLDT continue to lead the Philippine telecom market with strong financial positions, while Tito, though expanding, remains a distant third as it works to recover from losses. Each pursues distinct growth strategies. Globe focuses on fintech, PLDT via fiber leadership, and Dito through network expansion to strengthen market share and profitability.
For stock analysis, Globe Telecom issues two main types of stocks: common stocks and preferred stocks, with preferred shares further divided into voting and non-voting shares. The common and non-voting preferred shares are publicly traded, while voting preferred shares remain privately held. In 2021, the company redeemed 20 million non-voting preferred shares, resulting in the voluntary suspension from trading. Between 2020 and 2024, Globe's common stock displayed notable price movements. In 2020, prices moved sideways, followed by a sharp uptrend in 2021 during the pandemic, wherein a lot of investors bought stocks. In 2022, the stocks experienced significant decline, and in 2023 and 2024, prices consolidated but shows no signs of uptrend like in 2021. Moreover, Globe maintained a steady and consistent cash dividend to its investors. Ownership remains highly concentrated, with Singapore Telecom holding 43% and Ayala Corporation owning 30% of common shares. Despite this consistency, investors face market risk due to price fluctuations and other financial risks, which may affect future returns depending on the company performance. Moving on to bond analysis, Globe issued two tranches of unsecured, fixed rate US dollar denominated senior notes in 2020, listed on the Singapore Exchange Securities Trading Limited. The first tranche, valued at 300 million USD, matures in 10 years with a 2.5% coupon, trading at 91% of face value, offering a yield of maturity of 4.47%. The second tranche, also a 300 million USD, matures in 15 years with a 3% coupon, and that trades at 84% of face value, providing a yield to maturity of 41.98%. Both tranches are unrated and unsecured. In 2021, next slide please. In 2021, Globe issued a 600 million USD of senior perpetual capital securities, which differ by having no maturity date, semi-annual coupon of 7.2%, and a trade at 99% of face value. Principal repayments occur only if called after 2026, providing investors with steady income but no guarantee of principal redemption, and all three instruments require a minimum investments of 200 USD, limiting the investor base accredited investors such as banks and insurance companies. Moreover, investors are exposed to interest rates, currency, and credit risk, which may have to be carefully evaluated during before committing capital.
So Globe Telecom continues to move forward as one of the country's most trusted and innovative telecommunication companies. Their financial strengths and strategic risk management make Globe a stable and rewarding choice for investors. Starting with profitability, Globe has consistently maintained EBITDA margins above 50%, proving their strong operational discipline and ability to generate solid earnings despite market challenges. The recovering net profit margins and efficient cost control reflect a company that delivers sustainable growth and long-term value to shareholders. Considering leverage, next slide please. Its use of debt is not a weakness but a strategic approach that can fuel our expansion and nationwide connectivity. Globe's manageable debt ratios and steady interest coverage demonstrate that they are effectively utilizing borrowed funds to drive growth while maintaining financial stability. In terms of liquidity, next slide, Globe continues to manage its cash resources efficiently, Although their current ratios remain below 1, their consistent cash inflows and strong banking relationships provide them with the flexibility to fund projects and seize new opportunities without disruption. As for market risks, we actively hedge against interest rate and foreign exchange movements. With most of their loans locked at fixed rates, they minimize volatility and protect their earnings from market swings, ensuring predictable and reliable performance. When it comes to credit risk, next four slides please. Globe upholds strict credit assessment and collection policies, ensuring its receivables remain healthy and its cash flow remains steady. This financial discipline safeguards stability and reinforces investor trust. For liquidity risk, next four slides please. Their access to multiple credit lines and strong partnerships with financial institutions ensure that Globe remains capable of meeting both short and long-term obligations while continuing to expand. In summary, next slide, Globe's strong profitability, strategic leverage, and disciplined risk management create an investment environment built on growth, consistency, and resilience. For stockholders, this means steady earnings and capital appreciation, while for bondholders, it promises dependable returns backed by a proven record of stability.
So for the recent issues and the challenges, we have external and internal. So first, cybersecurity. Globe faced cybersecurity threats with rising cyber attacks. And they also faced infrastructure delays, network expansion faced delays from local government permits, and customer service problems where customers experienced delayed responses, interrupted calls, and slow internet. Next is for the monetary policies and regulatory changes. So the regulatory changes increase competition. With that comes aggressive competition. Now, competition intensified pressure on Globe, and global supply chain problems were raised upgrade costs and equipment scarcity. Now, for the impacts on stockholders and bondholders, stockholders faced higher investment risks due to operational delays, security threats, and competition. Now, for bondholders, they experienced maintained trust through effective financial management despite rising costs.
So under the comparative insights or the comparative analysis, Globe stocks are slowly recovering, and what's nice is that the returns stay consistent even if the prices go up and down. Globe keeps giving regular dividends, which means the investors can still do something every quarter. It also shows that the company is stable and cares about its shareholders. On the other hand, Globe's bonds are perfect for those who want a safer investment, as they give a steady and fixed income. So, you already know how much you earn. Now, bonds do not change much even when the market down, so it's less risky. By investing in gold, you can actually get a good balance. Stocks for growth and bonds for security. You can even earn from the both sides, and you can also feel confident that your money is in a strong and trusted company. Globe stock prices went up and down over the past few years, but companies still give consistent quarterly dividends with about a 5.4% return. This shows that the Globe values its investors and continues to provide steady earnings even when prices change. Meanwhile, US bonds give fixed and steady income until they mature. They're backed by Globe's good reputation and stable cash flow, so they're safer and more reliable for investments. But overall, the better choice for now is to invest in Globe's bonds. It is because they may not give a big profit, but they offer a peace of mind, steady income, and lower risk. But for long-term investors, bonds are also ideal. But for short-term or risk takers, stocks are still an option. Thank you.
Invest in what you love. Invest in Globe stocks and bonds today. Go forward together.